I hate making mistakes, especially ones that have to do with losing money. So in today's episode, I'm gonna share with you the biggest stock market investing mistakes and how to avoid them entirely. Welcome to the Investing 365 channel. Don't forget to like and sub, and let's dive right in. I see these mistakes happen every single day in the stock market. And it doesn't just happen to people that are new to investing. It happens to people that have been investing for years and years and years, and they just fall off track. So I want this video to be used as a reminder. Feel free to save it in your playlist, like this video, subscribe, any way that is easy for you to find this. You could even save it on the notepad in your phone. However it is that makes sense for you, I just want you to have this information available to you. And the reason why is because I see people making these mistakes all the time, like I mentioned before, and it's really, really easy to fall off track, especially in the world of investing. So the first and most common mistake that I see all the time is people that invest in things without understanding their investments. So what do I mean by this? So when you study, make sure that you're not studying just the company, because that's what a lot of people do is they just research, Google the company name. Is it a good investment? Boom. First thing that pops up says yes or no, and then they make their decision based off that. Don't do that. Make sure when you're doing research, you're doing proper research. So that means looking at the revenue, the debt, the competition, the long-term growth of that particular industry, the product, the average market cap, the PE ratios. And remember that the more data that you have about this particular stock, the more you're going to be able to execute a better trade or investment, whatever you're deciding to do. Whether you're investing long-term or just trading the short-term, having more data in front of you is going to give you that superior advantage that you're looking for and help you avoid losing money in the stock market. This common mistake I'm even guilty of from time to time is just falling in love with the company. Just because a company has made you a lot of money in the past doesn't necessarily mean that it's going to make you money in the future as well. And if it starts to trend sideways after a huge run, maybe your money will go to better use invested elsewhere. So remember this common mistake when you're investing. And this is very similar to number 7, but number 7 is even more important. But let's not get ahead of ourselves. Let's dive into the third biggest mistake that you can make investing. And that is the lack of patience. Selling an investment before it has its payday is a very common thing that I see people doing all the time. And then they have huge amounts of regret after the fact that they did this, and then they end up buying back in at a higher price, and it just looks so messy from another investor's perspective, and honestly it should not be repeated more than once. When you buy stocks, you should be buying stocks for the long term, unless you're a trader. Don't get me wrong, if you're a trader, you might be good to cut off some risk and take some profits in, but as a long-term investor like most of you guys on this channel, you're buying things for the fundamental reasons that it is a good investment. And if that's the case, you should be buying things and holding on to them for the long term, and you shouldn't be selling them unless the fundamentals of that business have changed since you first bought it. Just remember, don't sell just because the price hasn't reached new highs. Okay, number 4 is the most crucial, and seriously, everyone asks this all the time. Is it worth timing the market? And honestly, attempting to time the market is one of the worst things that you could possibly do, and seriously will cause you a lot of heartache. Sometimes it does make sense to cut your losses, especially around tax time. And at this time of the year, don't be afraid to cut some of those losers out. Just remember, when you're selling these, try to remember why you bought them in the first place. And when you do end up selling them, if it is for tax purposes, jot down either mentally or on a piece of paper exactly why you invested in the first place, so it can be later used as a lesson for yourself for future investment decisions. Number 6, and almost as important as number 7, is the inability to diversify. A lot of people, they want to become stock pickers, and they want to make great leaps in their portfolios. And in all honesty, there will always be winners out there that outperform your portfolio, and don't be down by that. If you stay diversified, you will have a portion of your portfolio sitting in a stock that pops off, and maybe you can sell some of the profits there, and it also mitigates your losses. And so diversification is really important when it comes to investing. Even if it's just like 5 stocks instead of 2, right? This simple rule, if you can manage to remember it, will help you not take as big of losses in the stock market. And also, you might not miss out on that huge company that you thought had good potential, but because you didn't diversify, you missed out on 1,000% return. This happens all the time. And if I didn't diversify, I might have missed out on Tesla, I might have missed out on Square, I might have missed out on Snapchat, I might have missed out on Facebook, I might have missed out on Google, Amazon, but luckily I did not. And that was all thanks to diversification. And this simple rule has been around since the dawn of time, really since investing actually was founded about 200 years back. Investors have been raving about this for a long time. So make sure to not leave diversification off the table when you think about your entire portfolio strategy. And for those of you that made it this far, don't forget to smash the like button. And I'm gonna throw in a bonus in here for you as well for those of you that stayed and watched the video entirely. But number 7, and second to last, is don't let your emotions rule your investment decision. Remember that a part of investing is to not let your emotions change your decision making and logical side of your brain. Oh, don't get me wrong, it will surely test your will at different points in time. One moment, your brain might be telling you to buy and hold. And then the next moment, your heart and your emotions are making you panic because the stock dropped 10-20% overnight and it feels like the end of the world. But remember that volatility does happen in everyday life and including in the stock market as well. Things that go up must come down and things that go down must go up. When volatility happens, it's all about having emotional intelligence and resilience, which happen to be the two biggest factors between a good investor and a great investor. So guys, I promised you a bonus lesson, so here it is. Make sure you surround yourself with people that are smarter than you. I know it's hard to believe. I know you guys are super smart, but there are people out there that have been investing for a long time and just have different perspectives, right? They grew up in a different environment. Some people grew up poor, some people grew up rich. So they have a different perspective and a different way of looking at things, companies, investments, and maybe even business ideas. All this is really important to remember. And as people say, 2 brains are smarter than 1. That's exactly why I started a Discord group. And for those of you who don't know what a Discord is, essentially it's just a big chat group where people can come together and talk about different subjects. Usually they are formulated to be a specific subject type. So people that like video games will start maybe a Discord for the games they like to play. And in my particular case, I started a Discord specifically for investors with the similar mindset that we have here on this channel. I wanted to get a lot of like-minded and very driven people all together in one place. The reason for this is so we can learn together. And if this is something that sounds interesting to you, there is a free version of the group that you can join right now. I'm gonna link it down in the description below. And if you're watching this pre-January 1st, 2020, it's not out yet, but if you're watching this in the future, anytime after January 1st, you can go ahead and join for free. And if you get any value from that, I would highly recommend you to go to the private section of the group. It's only 10 bucks a month. It's nothing crazy. It's less than a Chipotle burrito. There's a bunch of helpful resources on there that you guys are definitely gonna get a lot of value from. And I'm super excited to see you there. Hopefully you got some value from this video itself. Like I said, go save this video. And if you did get value from this, don't forget to smash that like button and obliterate the subscribe button if you haven't already. And if you don't ever want to miss a video, you can also hit the notification bell. That will then notify you every single time I post a video, which is about 3 to 4 times a week. So thank you all so much for watching, and I'll see you in the next episode. Peace out.